Did you know that in the UK, over £2.6 trillion of housing wealth is tied up in property? Yet, many homeowners still struggle to pass that wealth down to their loved ones without sacrificing their home. Today, we're diving deep into how you can protect your family's inheritance while still using home equity release. This is part 27 of our ongoing series, and if you're considering unlocking the value in your home, you can't afford to miss this one. Equity release can seem like a tempting solution to secure extra funds, especially when you're retired. After all, why not access the value of your property to enjoy a better lifestyle? But what happens when the time comes to leave a legacy for your children or grandchildren? Can you protect your home and the inheritance it represents while still benefiting from this financial tool? Let's explore how you can do just that. One of the most significant concerns with equity release is that the loan you take out on your property, known as a lifetime mortgage, can grow over time, reducing the value of your estate. It's not uncommon for homeowners to worry that by the time they pass on, there'll be little or nothing left for their loved ones. But what if I told you there's a way to protect that inheritance, even while unlocking equity from your property? The key lies in choosing the right type of equity release plan and structuring it carefully. Let's start with the concept of inheritance protection, a feature that many plans offer, but that few fully understand. In simple terms, this allows you to guarantee that a portion of your property's value will be preserved for your heirs. Here's how it works. When you release equity from your home, you're typically borrowing against the value of your property. Over time, the interest on that loan compounds, and that's where the risk of diminishing your inheritance comes in. However, with inheritance protection, you can set aside a specific percentage of your home's value that will remain untouched, no matter how much you borrow. Let's put this into perspective. Say your home is valued at £300,000 and you decide to release £100,000 in equity. With inheritance protection, you might agree that 50% of your property's value will be preserved for your heirs. This means that if the value of your property grows, or even if the interest on your loan accumulates, 50% of your home's value, £150,000 in this case, will always remain safe for your family. Now, this isn't the only strategy available. Another option is the no negative equity guarantee. This feature ensures that the amount you owe, including interest, will never exceed the value of your home. So, even if property values drop, your estate won't be left with the burden of debt. But it's not just about locking in guarantees. Strategic planning is also crucial. For example, many homeowners choose to release equity gradually, rather than taking a lump sum. This reduces the risk of borrowing too much too quickly and helps you manage your debt more effectively. Think of it like dipping your toe into the water before taking the plunge. Gradual equity release allows you to adjust and make changes as circumstances evolve. Let's take a real-world example. Meet Henry, a 68-year-old retiree. He lives in a £400,000 home, but is concerned about the rising costs of living. He's considering equity release, but doesn't want his children to lose their inheritance. After consulting with a financial advisor, Henry chooses a plan that includes inheritance protection. He releases £100,000, but ensures that 50% of his home's value remains intact for his children. Thanks to his careful planning, Henry enjoys the financial freedom he needs without compromising his legacy. Now, protecting your inheritance isn't just about choosing the right product. It's about ensuring you're working with a reputable provider who prioritizes your needs. When selecting an equity release plan, it's essential to look for providers who are regulated by the Financial Conduct Authority, FCA. This gives you peace of mind that the products they offer are in line with industry standards and best practices. Also, keep in mind that you should always seek independent, professional advice before making any decisions. Equity release is a serious financial commitment, and it's vital to fully understand the implications before moving forward. The bottom line? You can protect your family's inheritance while still unlocking the value in your home. By opting for inheritance protection, considering a gradual release strategy, and choosing a trustworthy provider, you can have the best of both worlds. Your home remains an asset for future generations, while you get the financial flexibility you need today. If you found this information helpful, you'll definitely want to stay tuned for more insights on how to navigate the world of equity release. Don't forget to like and subscribe so you don't miss the next video in this crucial series. And if you've got any questions or thoughts, drop them in the comments below. I'm here to help. This content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance. If you found this helpful, there's more to come. Watch the next video for another deep dive into protecting your financial future.